Hi, I'm Andy Tepper. I'm co-founder of PS Coin and the inventor of the PS Coin algorithm. PS Coin is a new exchange that properly incentivizes healthy behavior among traders in a market. I've traded on a lot of other markets and I tend to place limit orders, but I've always felt like a little bit of a sucker doing that because I'm providing information to all the other traders and I'm not being compensated for doing that. A healthy market is one with lots of orders on both sides of the order book that don't tend to go away as soon as the market starts moving in some direction. In our market, we incentivize this healthy behavior by compensating traders for placing orders for as many units of currency as you can, as close to the spread as you dare, for having those orders sit there for a long time, accumulating royalties, and eventually having it trade. So all the bids and asks you see on the PS Coin market are very likely to remain there. It's not an illusion of stability, it's actual stability. So let me show you how the math works for royalties in the PS Coin market. Here we have a market with 3 bids and 3 asks. We want to calculate something called stake of magnitude. We're going to first define magnitude. In the case of a bid, 15 bitcoins at $400 per bitcoin, you simply multiply them. 15 times 400 gives you a magnitude of 6,000. This second bid, 5 times 300 gives a magnitude of 1,500, and the third one has a magnitude of 2,500. You sum the magnitudes of each order to get the total magnitude for the market, and then for each one you just look at how much weight it has. 6,000 divided by 10,000 is 60% stake of magnitude. The second bid has 1,500 divided by 10,000, or 15% stake of magnitude. And the third one has 25% stake of magnitude. When a new ask is placed, each of these bids accumulates its stake of magnitude, its share, of the royalties that the person placing the ask pays. Now let's look at how magnitude is computed on the ask side of the order book. The math is a little bit different. In this case, you take 5 bitcoins divided by $500 per bitcoin, giving a magnitude of 0.010. In the second case, 3 divided by 600 gives this magnitude here, and 12 divided by 800 gives this magnitude. Again, you sum the magnitudes to get the total magnitude for the ask side of the market. So we have 0.030 total magnitude, and again, you divide this one by the total magnitude to get the stake of magnitude for this ask. So we have stakes of magnitude 33%, 17%, and 50%. Whenever an order executes, it captures any royalties that it has accumulated. If only part of an order executes, it captures whatever the appropriate percentage of that accumulated royalty is. Suppose this first order has accumulated $20 in royalties. If you retract the order, it gets redistributed to everyone else on the same side of the order book. Let me show you why we chose this definition of magnitude. You can think of magnitude as the area of a bid, or the area of an ask. In this case, we have a bid 3 bitcoins at $400 per bitcoin, giving a magnitude of $1,200. This corresponds to the area of the bid. It's intuitive that a bid of 3 bitcoins at $400 per bitcoin is more important than a bid of 2 bitcoins at $200 per bitcoin. The second bid is further from the spread, and it's for a smaller number of bitcoins. So the area of the second one is 400, the area of the first one is 1,200. Therefore, the first one will capture 3 times as much royalty as this second one.
Hi there, I'm Daniel, co-founder of PS Coin. I'm going to show you our online currency exchange. Let's start by signing in. Okay, we've arrived at my overview screen. I have my royalties here, my account balance is here, and my latest activity down here. But for the purpose of this demonstration, let's head on over to the browse screen. We're in a test US dollar to Bitcoin market. In traditional markets, an order book like you see here would be pretty familiar to you. There are 2 tables, one for bids, one for asks, and each table is columned by price, amount, and total. In our markets, however, there is a fourth column called royalty. Orders accumulate royalties as a reward for their participation in the market. Click on these question mark boxes for more detailed information. Now that we've had a look over our browse page, Brittany and I are going to begin placing some orders. First, I think I'll sell 5 Bitcoins at $500 each. I think I'll sell 3 more at $600 each. And I'd definitely be willing to sell 12 at $800.
I'd be willing to buy 15 Bitcoins at $400. I'd buy 5 more at $300. And 10 more if I could get them at $250.
Okay, so at this point, I have 3 orders. And Brittany has also placed 3 orders, which have paid royalties to my orders.
Well now, actually, I'm just going to buy 2 Bitcoins for $500.
So as you can see, Brittany purchased 2 Bitcoin for me at $500 each. I paid 5/1000th of a Bitcoin in commission, and I captured $13.33 in royalty. And as a result, I've successfully been rewarded for my participation in the PS coin market.
We're really excited about our new incentivized currency market. Initially, you'll be able to trade cryptocurrencies for other cryptocurrencies, but we're working toward cryptocurrency versus fiat currency markets, and even fiat currencies for other fiat currencies. We hope you'll try it out.